Hello, greetings, and welcome to Dividend Blasters. This is our 90th video, and it's the second video in a three-part series on investing in AI. Recall, previous video, I talked about the AI ecosystem, talked about the foundational levels of the ecosystem. And why did I do that? Because, to understand these stocks, to understand what these companies do, you need to understand where each of the companies plays in the ecosystem. What do they offer? What are their capabilities? How do they interrelate? Where are the dependencies? And so that was why I did the previous video. If you haven't seen that one, I advise you to go and check it out to give you that primer. Uh, because what I'm saying here, it'll make a little bit more sense and you have a little bit more context. Because today I'm going to talk about the stocks. And I'm going to talk about 19 stocks, what each company does, what their focus and contribution is, and then I'll get into a little bit of their numbers and what I'm doing with each of those stocks. Now, I own almost all of them. I have owned all of them at one point. Some of them I have actually sold out of for now, but I'm familiar with all of these. And this is not all of the stocks in the AI ecosystem. These are the ones that I own or have owned and I'm very familiar with. And then, our next video, I'll talk about key ETFs to get exposure to the AI ecosystem. So first, housekeeping, a quick disclaimer, I'm not your financial advisor. Video is for information and education. It reflects my own personal research, my opinions, and experience as an independent investor for more than 30 years. These are my opinions. So do your own research, do your own due diligence. Talk to a financial advisor. What I'm telling you is not financial advice. These are my opinions, and this is what I am doing. So I'll talk about the 19 stocks. Just a quick recall. I did cover this in the previous video, but I'll just shout it out right here. Recall the 5 levels of the AI ecosystem and look at the left panel. The way to look at this is kind of a hierarchy, and each level builds on the previous level above. The foundational level is the compute level, and this is the power and the energy that runs AI. These are the chips. So, the companies like the NVIDIAs and the Broadcoms, they play a very active role in the compute uh, level, as does Taiwan Semiconductor. Infrastructure is the cloud computing and the data centers that run off these chips. Then you have your data uh, modeling, and that's really the next 2 levels above that, and the algorithms and the model. And then you have the agents, like the autonomous systems, the tools, and we'll talk more about all of those. And really, the way to think about this, just briefly, is the foundational levels are the capabilities, the functional and technical capabilities of these companies. Okay, it's their skill set, it's their intellectual capital, if you will. The panel to the right is the market segmentation, and it's really a monetization of the solutions that these companies are delivering. That's a quick way to think of it. And I covered this table in the previous video. You can look at it, but it's just more of a detailed description of what I have said here and what I said previously. So here are the 19 stocks. Just a quick takeaway here. So I covered the 5 levels, but I added another level here. And the other level I'm showing at the top are 6 companies that play across more than one level of the ecosystem. These are the big companies, the big players. So you have NVIDIA, Microsoft, Google or Alphabet, Meta Platforms, Palantir, and Amazon. So that's the 6 big ones. And then in the compute level, the companies that solely play primarily in the compute level, the Taiwan Semiconductor, Broadcom, AMD or Advanced Micro Devices, Micron Technologies, ARM Holdings, and Qualcomm. And then infrastructure, we have 4. And basically, you have Super Micro Computer. It's a server company, and they work very closely with NVIDIA and Broadcom. You have a couple of chip equipment manufacturers, Lam Research and ASML. And then you have an enterprise IT company, Hewlett Packard Enterprises. Data level, I do not own, have not owned any company that is solely in the data level of the AI ecosystem. Um, there are a couple that I'm going to mention when I get to this that play in data, but play in other levels as well. And then there's a couple that are privately held companies that play solely in there, and you can't invest in them yet. They're not publicly traded. Uh, if there's a private equity deal coming out, I'll mention it. I'll post it on here, or I'll do a video on it. I think it's worth your time. And then in the model level, we have IBM, and you've probably heard of their model Watson X AI and Adobe, and their AI application is Firefly. And then, of course, Agent, and that is the most evolved top level of the ecosystem, and they depend really on all the other levels. And of course, we know that uh, their EVs are now becoming autonomous. We heard about the robo taxis in Austin, Texas. A very interesting company. I took away some of the thunder already, but not all of it for this slide. But I'll just cover this fairly quickly just to give you a thumbnail sketch here of each of the six. NVIDIA is primarily known for its Blackwell GPUs, or graphical processing unit chips. They started out as a gaming company, um, but that actually gave them a unique advantage because the gaming chips have to be so powerful to run great graphics. It gave them position them beautifully to lead the powering of the AI revolution. Their chips are very powerful, and they need to be. Um, so they're absolutely laser focused on GPU accelerators, having chips faster and more powerful to power computers, to power AI. That's what they do. And as I mentioned, they're in multiple areas. So they're not just doing chips for the sake of doing chips. They are focused on AI optimized servers and networking, building foundational models around AI, working with autonomous systems like Tesla, for instance. And Tesla's working to build some of their own chips, and we can get into that. But uh, NVIDIA is really the preeminent player here in the ecosystem, and I would say Microsoft is right there, or right behind them. Microsoft's been around a long time. They're a huge company. We're all familiar with Microsoft Office and Office 365 and Enterprise 365 and the apps within the Office automation apps. What they do uniquely and nicely is they have a cloud computing platform known as Azure, and they also have an agent known as Copilot. And they are able to integrate these um, tools across all their other apps, and they do it so seamlessly. And Microsoft is so big, and they have so much cash, and they can scale rather easily across multiple levels of the ecosystem, and that's what they're doing. Google, very much the same, and we know that they're very much a pioneer in the search, uh, engine world, and now, of course, in content creation like YouTube. Um, and they're very much focused on large scale AI modeling, and uh, we call it multimodal AI. And they basically have all these apps that I just mentioned. They have an agent also known as Gemini. So Microsoft has Copilot, Google has Gemini. A lot of these companies, they work together and they also compete. They're competimates, if you will. And they're also getting into autonomous vehicles known as Waymo. So there might be some competition there with Tesla. We'll see. I'm not seeing a lot of it, but they are there. They're working on it. Very big in cloud computing, though. Huge. Meta platforms. We all know about Facebook and Instagram. Well, Meta platforms, their strength is their open source AI modeling tools, known as Llama, um, and also doing a lot of research and development of the metaverse, and there should be more coming out with that. We know them through our interface with others and with them through Facebook and Instagram. Their strength is enhancing user experience. They focus on what we like and what we need, and they are very tech deep in making that happen. So that's where their strength is. Palantir, that's a big data company. They are an AI driven integrator and decision support uh, system company. They work a lot with the federal government. They're very big at working with complex data models and also classified data. Um, and they, if you've been watching their stock, they have been on a tear. And it may actually be a little bit overvalued, and I'll get into that. But it's a very interesting company. I own several shares of them. And then, of course, Amazon, the big e-commerce company. We've all gone on the Amazon site and bought stuff and gotten it delivered within 24 hours. It's quite good. Their strength is applying e-commerce and logistics and um, their cloud infrastructure platform, all integrating it together, also known as Amazon Web Services or AWS. They're very big into that. They're also getting into infrastructure with AWS Bedrock and Trainium chips. And there should be more coming out about that. I find this to be fascinating. We also know about their agent, Alexa. Actually had one of those delivered to my house, still in the box. Uh, you can talk to it and ask it questions. So I've seen other people use it. I have not, but I think it's interesting. Here's the numbers of the big six. So basically, I talked about the levels already and where they're leaders. You can see the price and then the range. I'm focusing things on like EPS, but the PE ratio. I will tell you that just a little bit of background: the PE ratio for the aggregate S&P 500 is in the 23-24 range. So I'm looking at that, and I'm also looking at these companies, and a lot of these have PE ratios more than that, except one. Nvidia's is about double, as is Microsoft's. Meta Platforms is at least 10 points above. Palantir is more than 100 times the S&P 500. It's huge. Amazon is a little bit more, about double. So Amazon, Nvidia, Microsoft are all about double the S&P 500's PE ratio. I will tell you that in my judgment, and I'm also looking at, and I put the market cap there. You can just see how big a lot of these companies are. I'm looking at a couple of other sources. I'm looking at the fair value of the company, and I could do a calculation, but I like to use Morningstar's assessment of the fair value of each of these and do a comparison of the price. And I also look at the 12-month price target, and I go to Market Beat, and they'll give me an estimate of what the company target is for the next 12 months. I will just tell you with NVIDIA, um, the fair value is 140. It's less than the price, but the price target is more. It's 175. I'm looking at two different sources. I'm doing a calibration of my own. What is my activity? The way to read this is I am holding. I have significant number of shares of NVIDIA. I'm not looking to sell them, but I'm not looking to add any more right now. I would probably wait for the price to come down around 140 or less. But I'm not selling because I do believe that this is going to be around for a while, and they are just going to get bigger. And there's going to be more profit to be made. So I am holding, and that's what the two yellow arrows are. Microsoft, I'm buying, but I'm buying slowly. And that's why I have a yellow arrow to the left and a green arrow up. And why am I buying? Because the fair value is a little bit more than the price. The price closed today at 492.05. The fair value is 505. The 12-month price target is 521. So I'm going to buy a little bit more. Even if the PE ratio is more than the S&P 500, I think that they're going to continue to earn more and they'll justify the higher PE ratio. It's a cash cow. Google, I am buying. I am really buying. That PE ratio is 18.8. To me, this is a steal. I love Google. Uh, I have a few hundred shares of Google. They closed today at 175.84. The fair value is 237. The 12-month price target is a little under 200. I'm buying. Meta platforms, I have, maybe 20 shares. I got in late. The price is high, and it's been high when I got in. I probably should have gone in earlier, but they closed today at 719, and the fair value is 770. The 12-month price target is 719 and a half. I am holding. I'm not looking to buy more. I feel like I've got plenty of exposure to Nvidia and Microsoft. I'm going to be increasing Google, but I am watching Meta. Right now, I'm not really buying anything, but we'll see. Palantir, I have a few hundred shares. I'm actually locked into an options trade, a long-term one, so I'm not looking to actually add more. And I actually have sold some of it before I got into the options trade, but I sold it when the PE ratio was more reasonable, but it was on a tear. And I got into Palantir a long time ago when it was around $16 a share. So I've made a lot of money. And when the option uh, closes, I'll have made a lot of money. So that's another story. But basically, I have already sold and I'm holding. Amazon, I am buying. I like Amazon. I think Amazon's going to be around for a long, long time. They closed at 220 today. The PE ratio, it's about 35. But the fair value is more than the closing price. The fair value is 240. The 12-month price target is little under 246. So I'm buying Amazon. All right, compute level. Let's go quicker. Taiwan Semiconductor, that is the biggest preeminent chip making foundry or processing plant or plants in the world. And they basically take the designs of the companies like NVIDIA and AMD and Broadcom, and they make their chips happen. They have the best processes and the equipment, and they know exactly what they're doing. And they're very keyed in on 2 nanometer AI chip fabrication. They have a special deal arrangement essentially with NVIDIA and AMD, as I mentioned. Broadcom, they're a leader in networking and connectivity chips. AMD, they are known for their Instinct GPUs, graphical processing unit chips, and their Ryzen AI processors. That is their area of expertise. Micron, they're basically a memory chip company. So they're the top supplier of advanced memory solutions in the world. And their memory chip is known as the HBM3E memory solution. ARM Holdings, they are basically known for their energy efficient CPU architectures. And they are used in Edge AI and Internet of Things devices. They're very energy efficient. And then Qualcomm, it's a wireless chip company. We all, at one point, probably have had a Qualcomm cell phone. I don't see too many of them, but their bread and butter is with their wireless chip technology, and they're known for their leadership in this area. Um, their wireless chips are known as Snapdragon, and they are a leader in it. So let's go to the numbers. Taiwan Semiconductor, they closed at 224.68 today. Their fair value is 262. Their price target is less than that in 12 months, 222.50. So there's a thought that maybe the price will come down and they're getting bought up a little bit. But today the fair value is higher. I am buying, but I am buying slowly. I have a small amount. I used to have more of Taiwan Semiconductor. They do offer a dividend, which is nice. Now, I don't buy any of these stocks, and I'm a dividend investor, but I don't buy any of them for the dividend. Um, the dividends tend to be modest, but they offer a nice little dividend. Taiwan Semiconductor. Broadcom network connectivity chips, they closed at 264.74. You know, that PE ratio is a little bit high for me. And Broadcom was really the first major chip stock that I got into in the last 5 or 6 years, and that's where I made a lot of my profit, and I was able to parlay that into Nvidia. Now I'm into Nvidia. I have a handful of Broadcom shares. I'm just holding. I'm not looking to acquire any more. Just going back to Taiwan Semiconductor, their PE is much more favorable than Broadcom. So now let's go to AMD. They closed at around 136.11. Um, their PE ratio is a little too high for my taste. The fair value is less. It's 120. The 12-month price target is right about where they are. I am just holding. Um, I used to have more AMD, but I sold out at a profit and went into Nvidia. Nvidia is my, it's my racehorse in the chip game. So, Micron Technologies. I don't have any Micron right now. I did about a year ago. I kind of wish I had held on to it because I like that PE ratio. It's a little under 16. They closed at a little under $121 today. The fair value is 115, so it's a little bit over, but it's probably trading fairly. But the 12-month price target is expected to be around 146. So I am looking to buy back in and get a little bit. ARM Holdings, they closed at 156. I am selling, and I have very little. I've sold most of it already. That PE ratio is too high, 92. I'm not looking to buy anything at a PE ratio of 92. The fair value is 80, so it is overvalued, and the price target is 152. So maybe in 12 months I'll have bought back in, but I'm not going to buy in at 158. I'll buy at 80 or 90. We'll see where that goes. And then Qualcomm. And you know what? I like Qualcomm. I really, really like Qualcomm. I like it for a lot of reasons. I like that PE ratio of 13 and a half. And Qualcomm kind of goes under the radar, wirelessly, no pun intended. Um, they pay a dividend of 2.25%, which I love for a chip company. But the fair value is 170. Okay, so it is a little bit more, about $11 more than the current price, but I like that 12-month price target of almost 187. So I have a little bit of Qualcomm. I used to have more. Again, I sold a lot of these other chip stocks when I went into Nvidia, but I'm looking at Qualcomm, and I'm going to buy a little bit more. I'm going to get back in. All right, that was compute infrastructure. Again, we're talking about servers and data centers and cloud computing. I got four of them here: Super Microcomputer, Lam Research, ASML, and Hewlett Packard. Um, Supermicro, they're basically known for their high performance GPU dense servers that are optimized for AI data centers. And they work closely with NVIDIA. Uh, so, that to me, because of that relationship and the trust that NVIDIA places in them, is definitely a company you ought to keep a close eye on. Lam Research, this is one of two chip equipment manufacturing companies. Um, and the other one is ASML. Uh, and I'm going to get a little bit more into the numbers, but let me just say they're both focused on what we call EUV lithography equipment, and these are the machines or the tools that make the chips, and they can go and create very small chips, and they can imprint really really tiny stuff on chips. It's very complex and sophisticated equipment. So they kind of stand apart, and I would just say that ASML really, really stands apart in that field. And then, of course, you have Hewlett Packard Enterprise, and basically it's a major company in enterprise IT. So they're not a chip company, but they're basically an enterprise IT company, and they deliver comprehensive AI infrastructure solutions across hardware, software, cloud, and services. All right, let's get into the numbers. So these are all infrastructure. Already talked about where their focus is on. Uh, Super Micro closed today at 47.20. You know what? I like that PE ratio of 22.86. They had some issues, um, and there was talk of them possibly being delisted a year ago because the auditor had their financial statement auditor was concerned they couldn't come up and do an attestation of their financial statements. That seemed to get resolved. So I think they're undervalued. I like the PE ratio. They don't have a dividend. Market cap, they're not big. A little under 29 billion. The fair value is about $10 more than the price. But the 12-month price target is right around the current price. So I have a little bit of Super Micro. I don't have a lot. I'm just kind of holding. I may pick up a share here and there. Let's do Lamb Research. So they closed at a little under $97 a share. The PE ratio is rated about the S&P 500 market level of 24. Um, the fair value is a little bit less. It's about $86. The price target's a little bit more than that, but less than the current price of 96. It's around 94. I'm holding. And I'll tell you why I'm holding. I'm not looking to acquire more because I'm looking a little bit closer at ASML. I think that this is the preeminent chip maker or chip equipment maker. So this is the company that makes the equipment that makes chips. So like a Taiwan Semiconductor would buy their equipment from ASML. So the PE ratio is right around 29. It's a little more than the S&P 500. They closed at a little more than $790 a share. They haven't done any kind of a split, so that price is very high. They do offer a dividend. The yield is a little under 1%, because the price is so damn high. It's almost $7 a share. Market cap around $311 billion. The fair value, and this is what I'm focusing on, the fair value and the price target. The fair value is 960. So the fair value basically is significantly more than the current price. The price target 914. I'm looking to buy. I'm looking to add a little bit more. I don't have a lot of ASML. I have a little bit. So I dollar cost average in with this company, and I'll add a little bit more of my ASML holdings. HPE, I think, is a wonderful stock. I like the price. It's $20 a share. Just closed at 20.48 today. That PE ratio is a godsend. It's under 10. They offer a dividend, okay, 2.82%. And I think that this is just golden. The fair value is 24, so it's a little bit more, about 20% more than the price. The price target, about 21.3. So it's a little bit more, about 10% more than the price. I'm buying, and I have about 500 shares of HPE, and I'm going to look to add a little bit more. So those are the infrastructure players. So the data players, as I mentioned early on, there are no publicly traded companies that I have or have owned that operate solely in this level. There are a couple leading companies, but they're privately owned, like Snowflake and Databricks. Also, there's a publicly traded company called Teradata. They focus on data management, data warehousing, analytics, but they also provide tools and platforms, and that's where their infrastructure play is. And they do model development, and they have application layers. So Teradata plays in multiple levels of the ecosystem. So I'm just mentioning that there. I don't own Teradata, haven't owned it. I'm looking at it. All right. The model level, IBM and Adobe. Real quickly, IBM is known for their Watson X AI platform. It's a cutting edge enterprise platform that empowers organizations to build, customize, and deploy AI agents and and generative AI models with robust governance and flexibility. Watson X AI. The other one is Adobe, and they're known for creative generative AI tools, especially Firefly. And with Firefly, you can do text to image generative fill, vector recoloring, and the ability to generate video and audio content. So that to me is exciting stuff. All right. Looking at the numbers, IBM closed a little under 292 today. Their fair value is 242. The price target is 253.75. So they're a little bit overvalued. They're a little bit overbought. I have a little bit of IBM. 15 shares. I'm not looking to add. I'm just going to hold. Adobe, they closed at 392.10 today. Their fair value is 560, and the 12-month price target is 498.75. You know what? I like the PE ratio on Adobe. It's less than 19. I am buying more Adobe. And then the last one, Tesla. And this is the sole one that I own or have owned in the agent level of the ecosystem. They're known as an EV company, but what makes them an AI company? They have autonomous vehicles and they make robots that can do real-time AI decision making. The autonomous vehicles can too. If you've seen the robo taxi, I've seen videos of it in Austin, Texas. Is quite fascinating. So, they're pioneering end-to-end AI for autonomous vehicles and robotics. Exciting stuff. Let's get into the numbers. So they closed today at $300.71. That PE ratio, that's too high for me. A quick disclosure: I used to own a couple hundred shares of Tesla. I did sell all my shares when the PE ratio was getting a little bit, when it was actually reasonable, and I wanted the cash. Um, but right now it's overinflated. So I have sold out completely, but I'm watching it. It's kind of a volatile stock for a variety of reasons, the technology, but I think that the chairman is a very controversial guy. He's a genius, no doubt, but he spreads himself kind of thin. Um, but that's a whole other thing. The fair value is 250. The 12-month price target is 298.37. So right now it's a little bit above the 12-month price target, but it is significantly more than the fair value. I have already sold. If I had shares, I would sell some of them. I might hold on to a few, but I've already sold them all. So that's kind of where I am. Now, if the price comes down, if I see it come down, and it could come down quickly, below 250, that could happen. It could happen in a day. A very volatile stock. I might go back in. I think that this is a revolutionary company. Um, but you can't own everything. So I did sell everything, and I feel well covered by the other stocks that I've covered today. And I'll probably go back in when the price comes down. But folks, that is it. That is it. I hope you found this to be useful and informative. And I would just remind you that as an affiliate of Seeking Alpha, I can offer you discounts to the premier online investment publication, the digital publication. Get you 20% off on the premium, Seeking Alpha Premium or Alpha Picks. With Premium, you get access to all the greatest, latest analysis of stocks and ETFs 24/7. You can get a 7-day free trial. Order it. After 7 days, you don't like it, cancel it. Right? But if you keep it, you're going to get 20% off the price. Alpha Picks, that's another offering. You will get 2 picks every month of the best stock out there that have significantly outperformed the S&P 500. I subscribe to both of these. I've been a subscriber to Seeking Alpha and to Alpha Picks for a very long time, years. I am a new affiliate, and I believe in these um, analyses that I'm offering you. So 20% off of Alpha Picks as well. You can see the dollars off, 60 for premium off and 100 for Alpha Picks. If you want to bundle them and get them both, $160 off. Still 20%. You can see the QR codes there to the right. I've also provided the links. You can copy and paste them. I'm also going to provide them in the comments field. Um, and here's just a little bit more detail on Premium and on Alpha Picks. I am also on other platforms. You can find me on X, on Instagram, and on Facebook. Folks, that's it. Have a wonderful day. I hope you give us a like and subscribe. Until our next video, have a wonderful day. God bless.